Yeah, hello everybody. Welcome to the River Oak Capital Annual Meeting 2022. Happy to see you all here. My name is Larisa and I'm your host today. We start with the meeting with a few words by Daniel. He will do the introduction and then a recap on the 2022. Straight after that, we will introduce a new board member. His name is Alexander Pichler. And after that, we will go to a Q&A session. We have a few questions to start with, but if you get any questions during the meeting or at the Q&A session, you can always type in the chat. We will read the question, or you can raise the hand if you want to say it yourself. You can find the button on the reaction. Yes, let's start the meeting. A few words to Daniel.
Thanks, Larisa. So since the interest for the physical meeting was a bit modest, we're actually live here from River Oak headquarters today, going with our low cost mode. And to be clear, the formal part of the annual meeting was done actually by mail voting. So this is rather, and the votes are counted and it will be sent out afterwards, but this is actually the informal part of the meeting. Yeah, to summarize 2022, I think it's safe to say that the first half was not good. The second half was better. And in our business, as I said many times, results can never be promised. What I can promise is that as a significant shareholder, I do feel the gains and the pains just as much as everyone else. You've all heard lots about the war, interest rates, inflation, etc. So it may come as a bit of a surprise to you, but I do think that the main issue last year for us, while we were affected to some extent by all that, was rather a few misjudgments on my behalf of a few companies. And without them, we would have been close to break even. But my dad actually often says that if grandma had a mustache, she would be grandpa, and she's not. So these misses are unavoidable, I think. But the good thing about them, whenever you make a misjudgment of an investment or in a marriage or whatever it may be, you do get a few new filters that you can apply. You do get a few learnings, and you move on much stronger and wiser from it usually. And the rougher the graver the misjudgment, the better off you'll be usually. So that was changed. I also implemented some changes in terms of the balance of our portfolio. As you know, we sort of our core when we grew up in the early years, 2018, has been in software and online-based businesses largely. And over the years, it went more and more towards that. So we were heavily weighted there when 2022 started. And it simply made a lot of sense to me during the year to change that a bit. So I mentioned two categories in the letter where we invested last year, and one of them was energy, and the other one was high interest rate beneficiaries. And the idea is that they will complement and counterbalance to some extent our software and online-based businesses. And this doesn't mean that we'll always have 20% in energy or 10% in high interest beneficiaries, or there are no fixed buckets like that, because I think if you have that, you'll end up wanting to fill one bucket very badly to reach the 20%, let's say, or 30% or whatever limit you have put on it. And that usually leads to bad decisions in my experience. So it does mean that there is a lot more focused time. Let's say if one bucket is lower, I do spend more focused time on that bucket that I otherwise would have, since I would say that software and online-based businesses come a bit more naturally. I don't need to spend as much time and focus to understand those businesses well enough to invest. All in all, I will say that I think it was the most valuable year so far we've had. Some lessons you simply cannot learn in most years. You need a really tough year to learn them, to see what can happen when the tidal waves shift. And it kind of reminds me a bit of, I fully understand that you may not appreciate it when you see your investments being marked down, but it reminds me a bit of this complex building project we had at our house once, and took away more time than was supposed to. A lot of issues came up along the way, and when we were done, the project manager on the other end, he told me, well, Daniel, I know everything wasn't perfect here, but we sure learned a whole lot on this project, so thanks a lot. I thought, well, that's great, but it would have been even better if you had learned that before we started the project. But the reality is that when you're trying to do difficult things in life, whatever it may be, everything never goes as planned. And it's the same for us. It should be expected, and just need to learn and go stronger out of it. And yeah, that was a very short recap of 2022. There are more details in the letters if you're interested in that. As for the first quarter, we had our book value at the end of the first quarter was 221 per share, up about 5% on the year, and which means that the basis for share transactions at the end of the first quarter was 101% of book value, so 223 per share. Some transactions were made. People were moving from capital insurance account in Sweden to their privately owned companies, mostly, but we also had one transaction where a shareholder sold, and actually Alex, that I'll introduce soon, acquired some shares, our new board member. And these quarterly numbers, I don't need to remind you, but while I gave it to you now, we were up a few percent. I really would not read anything into it, and as you know, I recommend 3 to 5 year periods to evaluate anything at all, at least 1 year, and the rest is rather meaningless, since no one really knows why certain stocks move up or down in 1 month or a quarter, and there are a lot of opinions and reasonings about this. Depending on who you ask, you'll get a different answer, but it's really meaningless, and you all know that. Just to end up, our ultimate goal is to achieve 15% average annual returns. And so far in our first 6 years, we're at 21% average annual investment returns. Some periods will be lower. I unfortunately do not know which ones before I have the benefit of hindsight. But it is 15% or better investment return per year is what we're trying to achieve over the life of River Oak. And if we do that, I do believe that there will also be a very good and satisfactory increase in our book value per share that's reflecting that. Yeah, back to you, Larisa.
Thank you, Daniel. Yeah, next in the agenda is the introduction of a new board member. But before we go to that, I will give a short word again to Daniel. He would like to say a few words to Arimatti, who is a current board member, but he decided not to stay for re-election this year. So yeah, few words to Daniel again.
Thanks. Yeah, so Ari is here in the, not in the office here, but in the audience. Yeah, I just really appreciated these 2 years, Ari. Thanks a lot for doing it, and I will mention that Ari helped with some really crucial insights on some of our investments, which is not really the main job of the board, but it was something that was helped me and in relation helped all of us pretty good. And now he started his own investment fund, KOS Invest in Finland. So we both came to agreement that it was better to focus fully on that and not have the overlap that we may have had on a few occasions. And yeah, Ari is from Finland, and he's a big golfer actually. Some of you may have this Facebook for Golf app. I don't remember what it's called, but every time I look at it, it seems like Ari has a birdie notification there. So Ari will get this. There is 10 green fees on Tapiola Golf, which is right next to his house. I don't know if you can see Ari's house somewhere here on the picture, but it's somewhere there. So as a small thank you for these years, Ari. So I don't know if you want to.
Yeah. Thank you so much. Maybe you could see, actually, I can see almost the golf course from my house. So maybe it was thank you so much, Daniel. Yeah, I can also say a couple of words. So as you said, yeah, it has been a pleasure to be in the board of River Oak for the past 2 years. So many good chats with you, Daniel, and also with Amir, who is sitting there in the office. So hi to Amir as well, even though I cannot see him. And additionally, I would say that me and our family, we have been real River Oak ambassadors, because after I got this T-shirt and also cap, so I think I have been using them almost on a daily basis, I would say, and my wife as well, and the kids also. So I last week when I traveled to a conference in Madrid, so I also had them there. So it has been in use, and especially as you said that I started my own fund with a colleague of mine last year. So in the beginning, there are a lot of expenses, not so much income. So it's nice not to spend money on clothing. So it's good. And then additionally, I would say that about Daniel, I mean, he's a great guy, and I think I don't know any other person who thinks about different businesses as much as he does. Sometimes we have had 2-hour phone calls, sometimes even 3 hours in a row. And I can always remember when I came to Uppsala, I think it was late summer 2021. I came quite early in the morning with the boat to Uppsala and then continued to Skåne later. But after a couple of hours, I can remember we decided that, yeah, let's go for lunch in the city center of Uppsala. Daniel, you took your car. I took my car because I thought that, yeah, I will continue my journey after the lunch. And when we began our drive, I saw that Daniel is calling. So I thought that, yeah, maybe you forgot something at home, so you need to go back. And I answered the phone, and obviously you wanted to talk about businesses. So it was only 50-minute drive to the city center. And I thought in my mind, wait, it's like 50 minutes, can we just continue when we arrive to the final destination? But yeah, you also wanted to use that 50 minute slot effectively and talk about companies. So I can always remember that. So yeah, I think it really tells how much you love what you are doing, and I appreciate that a lot. Thank you.
Thanks, Ari. And best of luck now with the new fund, of course.
Thanks.
Thank you, Arimatti. Thank you, Daniel. And now I'm happy to introduce the new board member. His name is Alexander Pichler, and he is CEO for Delmo, the company based in Bolzano, North Italy. He is also here with us in the office, and I would like to give him a few words so he can do a much better introduction. Alexander?
Hello, everybody. Happy to be part of this exciting journey in River Oak. My name is Alexander Pichler. I come from the north of Italy, from the Dolomites. Maybe some of you have visited that area. It's quite famous for skiing or for hiking, the Dolomites. I reached out to Daniel actually a couple of years ago, and I still remember this email. I tried to put up a list of common themes that maybe we could share and where we could discuss. Unfortunately, then COVID came and we never really got in touch. So I never could have imagined that reaching out would have led me to a board position in River Oak. But this is serendipity, and I'm quite happy to be here. I know there are large shoes to fill with Ari. He did a very, very great job, and he's a very knowledgeable person. But I think I bring also to the plate some experiences. I've started my career with a consultancy, an American consultancy in corporate finance. And then I joined the family business, was there the CEO of a trading business for 10 years plus. And in parallel, I developed a passion for stocks, for listed companies. And it brought me to Sweden, often to research companies, to visit them. And besides that, I also run a small company that does real estate development together with a partner, where I'm more on the strategy and on the financing side, and he does the sweat work, like the project manager that Daniel mentioned. So looking forward to add to River Oak, and hope to make it successful journey together. And thank you for being part of that.
Yeah, I'd say a word about Alex too, and I just say one of my main experience with Alex is quite a humble person. Normally, when you talk to people, we all have a friend like this. You talk to them, and you usually have to divide what they say by 2 or 3 to get to the actual truth. Alex is actually the opposite. So with him, I found that he says something, and you usually find a lot more behind the scenes, so to speak. So he's a humble person. He's bringing a lot of valuable experience, and yeah, looking forward to it. Welcome, Alex.
Thank you, Daniel. See you.
And we also have the final board member here. So now that we're all collected here, I think Amir Dav can come and say hello as well.
Hi, everyone. Hey, guys, and hey, Ari. Thanks for the nice words. I had a great time with Ari the last couple of years in board meetings, and yeah, I'm just here to enjoy the lovely Swedish weather, and happy to be here again. I hope to see some of you guys in person in the future. But yeah, let's keep it going, and looking forward for the new board meetings with Alex.
All right, great.
Thank you, Alex. Thank you, Amir and Daniel. Yes, and now we move to the last part. It's a Q&A session. I'd like to mention again, if you have any questions to Daniel or to the board members, you can always type it on the chat, or just push the button, raise the hand. But we have some questions we would like to start with, and the first one would be, Daniel, from all you wrote about 2022, could you please crystallize the main takeaway of all the changes and everything what had happened? Is it something that you think we should move to energy, or any other question?
So I think probably the main learning there is one of the issues that caused some problems for us in the first half of the year was where my mindset was in terms of thinking about different aspects of companies, different businesses and their respective risks. When you have not seen, and this mindset sets in, I think obviously a lot of people were in the same mindset. this mindset sets in when you've had a period like we had with 10 or 12 years of an upwards going market, very low interest rates, and easy money policies around the world, so to speak. So I think the big change is the mindset change. Like I think more in terms of how I thought about things, say 5 or 10 years ago, where you had seen some more significant ups and downs recently. I remember when I started out, everyone was talking about potential double dip in 2008, after 2008, which never really happened, but that was the flavor of the day back then, and you kind of had it in back of your head. But over the years, and it's been 15 years since 2008 now, this tends to go away to where you're not thinking as much about it as you should. That said, I would like to emphasize that even though most of our holdings went down in 2022, the good companies who have kept doing good, who were actually what I believed they have kept doing well, and those are not the problems that have hurt us, especially not if you look until today, or end of the first quarter, let's say. So the problems were really in those few companies where you simply did not envision the risk as much as where I didn't think as much on the risk as I should have. And it's largely a mindset question, I think, which has been the big change up until now.
Thank you. We have a hand raise, and I give word to Cyril.
Yeah, thank you, Larisa and Daniel, for sharing the insights and being so frank and honest about what went wrong the past year. So I understand that it's an advantage if you have permanent capital and you don't have to worry about redemptions. And so my question is, for the past year, what percentage of capital was redeemed? Has there been any money pulled out of River Oak?
Well, yeah, no money can be pulled out of River Oak, but of course you can sell your shares, which means someone else buys them. So the capital at River Oak is intact. I would say that in total in the past year, less than 2% has been sort of transacted, but thereabouts maybe. Depends. If we're looking at the start of 2022 capital base, it's definitely less than 2% of that was sold and transacted.
Excellent. Thank you very much.
Yes, and we move to the next question. You mentioned in one of your last reports that you will invest closer at home for a period of time. Can you elaborate a bit more on that?
Yeah, I think all these, I try to separate what we do in buckets, because I think that's helpful a little bit to understand that we have maybe a Nordic bucket, we have an international bucket, which is Europe and the US, and so on. And now lately I've also mentioned, higher interest rate beneficiaries and software as a category. I think it was a few years ago where I said, Sweden or closer to home, let's say the Nordics, would be a bigger focus. And what this means is, I focus my time. It doesn't mean that we will be 100% in Sweden or the Nordics, or, as I said, a certain percentage in these different categories. It's just so dependent on what happens around the world with a lot of parameters. So I go where the work takes me, basically, where the research takes me. And what I will try to avoid is a very heavy concentration in just one area, like we had to some extent starting 2022. The preference, of course, geographically is always the Nordics, simply because I can usually call up a CEO and get an answer, or I can send an email and get an answer. This is not possible in most other parts of the world. Nordics is a bit unique here, I think. And they're usually very happy to do it if you pose good questions. They understand that you have read a lot about their company, that you're interested, and they usually give you very good information, which enables you to get a much better understanding of what is driving things. So it is an aspiration and a goal, but we will not always have by any means 100% in the Nordics. I think that would be very unlikely, but we have been over time, I would say, between 30 and 80% in the Nordics, and that will certainly continue. Preferably over 50, definitely.
Yes, thank you. Next question. How do you size a new holding? Do you buy it gradually? How does it normally work?
If it's a new holding, it's more likely to be gradual because I know it less well. I mean, a completely new holding, which I've known for a few weeks or months. If it's a holding I know well from the last 5 or 10 years, and I feel that now something meaningful has changed or so, the sizing can be quite large on day one. So I think the starting size would be between 7 and 20%. 20 is very unusual, of course. Between 7 and 12 is the normal. But I very much prefer the ones that I can size at 12% rather than the 7, because when you size it smaller, it's usually because you're less sure about it. So the preference is for that, but it can be gradual, but say over a few months. So it can be, say, on day one, it could be 7, but then it could be quickly 9 and 12 and 15, quite in rapid order after that. Yeah, and on occasions, that might be because there are not enough available shares or something. It could be a starting position size of 5, but I think between 7 and 12 gives you a very good idea of the general.
Yes, thank you for that. Yeah, and now with all last year and everything, does your work day changed? How does it structured now? How does it look like on an everyday basis?
Probably hasn't changed at all, actually. You might have had a more cheerful mood in 2019 or 2020, just generally speaking. And this is not me particularly. I tend to like the tougher stretches, but just everyone you speak to, I guess, in the industry would have a bit more cheerful mode. And it's everything from, company managements to other investors, to shareholders, to whatever. And I think it's very helpful to have a bit of both, as we have had now, that you actually get a view of how things can look when it's a more challenging period, and we've had good periods, and both are important. For me, I haven't basically changed anything. Of course, I'm competitive, so I probably have worked maybe a few more hours in the last year and a half than I did before, but it wasn't like I was working very few hours before either. So it's no big change, actually.
But how does it structured? Do you look into every company every day, or what is your main structure?
I would say that about 50 to 80% of the time is on our current holdings. Keeping check of them, making sure that it is what you believe it is, making sure that actually the business is as strong as you believe. And the other 20 to 50% would be talking to management teams, reading about the new companies, going to meet them, talk to their customers, talk to their former employees or actual employees. And of course, the more time, well, the more cash we have, the bigger our cash balance, the more time I would tend to spend on the latter, talking to the new companies. If we're fully invested, I would say it's pretty close to 80-90% of the time where that I spend on those businesses. It's usually businesses you admire and like, so it's a very fun day usually. The ones we own. So it's easy to spend time on, actually.
Thank you. Yes, and the next questions. Ups and downs, even large swings, are happening regularly in stocks, in stock markets. What advice do you have for an investor in Riverrock to better stomach such situation?
Yeah, this is a very good question because we're all different. I would say that the main thing is how I always think about investments I make for Riverrock's behalf is you make the investment on day one based on your view over the next 2 to 3 years, perhaps. You want things to track along that way. If it doesn't track along that way, this can obviously happen in Riverrock as well. You know, you can always reduce it to a level where you feel comfortable, and you can always sell it, of course, if it doesn't track. But it is important, I think, to make sure that it is tracking along the lines that you expected when you invested on day one. That's usually how I think about it, and that's the advice I would give. You know, think about why you invested on day one. Is that this is still intact? And think about the time horizon you set out on day one. Was it 1 year? Well, probably not at Riverrock, but was it 3 years? Was it 5 years? In some cases, I've had a shareholder said, you know, see you in 10 years. That's fine too. But most of us have a shorter time horizon than that. But really, I think that day one the day one thinking you had is really important, because nothing, whether it's our operation, whether it's a business operation, whether it's life or marriage or anything, goes up in a straight line. There are bumps on the way, and everything is going to have that. So you should be understanding of some bumps, but not too many over time. And that goes for Riverrock as much as it would go for any of your other investments, of course.
Yeah, very good. And now we are out of the big questions, but I have a last question. Probably all the shareholders has already your contact numbers and know how to reach you. But if somebody else would like to reach you, talk to you, or write you, how can they do that?
Yeah, I think all of you have my number, email, whatever. You know where I live. All of you as well. So yeah, I have spoken to quite a few of you, maybe not the ones that are here today, but I've spoken to quite a few shareholders over an half an hour, or even more than that. And hopefully shareholders get a lot out of that. And I always learn something as well. So I encourage you to do that you might get more detail than you get in a meeting like this, or than you get in one of my letters, to just talk face to face, either here at the office or over a Zoom. So yeah, feel fully free as always to do that.
Yeah, great. Then we come to the end of our meeting. I would like to say thank you to Daniel, everybody who's signed in, for Alex and Amir who were with us. And yeah, you can contact Daniel if you have any question. Thank you for today.
Thanks, everyone.
Thank you.
Bye.
Thanks a lot. Bye-bye.
Thanks, Daniel.
Bye.
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 Thank you. Bye-bye.